how to consistently grow a small account. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. It's a risk disclosure. We're not financial advisors nor a broker-dealer. We're actually going to look at a couple of returns on investment, and apparently no recording, no photography, and do not feed the monkeys. That's what they say at, the beginning of every good zoo tour. All right, next one, copyright disclaimer. This is ours. This is not yours. But the other reason I like to throw this up here, and as I say all the time, please email us. Yeah, you know where we're located. You can email us. By the way, we hit you back on emails in under 24 hours. So that's also for trade-related questions. So you can also give us a call at 800-256-8876. And again, we're located right here in Scottsdale, Arizona. All right, some of the informalities out of the way. This is why you are here. Listen, I want to give really specific kind of goals for this particular webcast. By the end of this webcast, I want you to be able to walk away with not just knowledge, but something tangible, right? Number one, why traders and investors alike outright fail with many types of strategies they embark upon. In fact, I'm actually going to cover one, very, very specific area, almost right up front over here of it's a strategy that's used all the time, and it's all kinds of wrong, and I'm going to show you why it's all kinds of wrong. Number two, why point out a fault without going out there, pointing out how to do it right. Number two over here, why you need to be cutting risk in order to produce consistent 55+% returns surrounding high probability movements in any stock, ETF, or index. This is obviously going to be one of the core strategies. Number three, learn to grow an account with high degrees of consistency. Even in a world filled with tweets, interestingly, in irony, you're going to find that those tweets actually help you. That short-term chopped out volatility is good, people. That's something a lot of people have a difficult time with. They're like, how can you get involved in this business right now when you have China tweeting at us, the administration tweeting back at them, and you're just a trader caught in the middle? This is a good thing. Number four, how you can trade without having to continually monitor the positions. We're going to actually talk extensively also tonight about set it and forget it with this high probability strategy. So those are some of the goals, is some of the things of literally why you are here this evening. One other aspect I want to give you tonight, our gift to you, if you stay with me, to pretty much the end of the webcast, I'm actually going to give you a link to our SPX expected move indicator. We get so many emails about this particular indicator that listen, if you're willing to spend the next, 70, 80 minutes with me, then I'm going to give you the SPX expected move indicator. I will show you specifically, where that you can download this, right at the end of this evening's webcast. Listen, it's got 3 years of weekly expected moves in the SPX. All right, it's all of my hand calculated expected moves, and it's an indicator. It'll change the way that you view the markets on a day-to-day and a week-to-week value. It's $197, and the value you're going to get out of this indicator it's incredible. And by the way, if you've never seen the expected move indicator, what we've actually done is we've calculated weekly expected moves. Now, that does pertain to options, but these little hash marks, effectively what it's doing, it's telling you, the range that the marketplace is capable of moving according to the options market. So it's derived from the options chain, and these highlighted candles like here and here, those are breaches or breaks in expected move. This thing can tell you about buying options premium, selling options premium. It can define efficiency or lack thereof in the markets. There's so much embedded in this particular indicator. I do hope, again, that you will stay with me until the end of the webcast. We will provide each and every one of you a link to the SPX expected move indicator. Again, we get so many emails about this. It's what we cover in a lot of the videos that we do on a nightly basis. It's yours. Hang with us to the very end. All right, onward and upward. A little bit of housekeeping. Listen, what you're about to learn is a skill set. And you got to pay attention during this course material this evening, okay? Whatever it takes. Listen, shut the door. I don't know if you're on your phone or not, if you're on your desktop computer, if you're on your iPad. Shut a door, turn off the Skype, turn off the chat, whatever else distracts people. There's no football on tonight, all right? That's till Thursday. Close Facebook because it's just a waste of time regardless. Phones on silent. Kick out kids, okay? Or maybe grandkids. The dog can stay. The dog can stay. Cat, all right. Even the cat can stay. But listen, you took time to be here this evening, all right? This is important. Just focus on being here. And I can't stress that enough. When I say focus on being here, spend the next 60 minutes and focus, because I'm going to go through a ton, okay, of highly detailed examples on a trading strategy tonight. All right. Listen, people, they often ask, why and what brought me to you this evening. So a little background history on me. First of all, I watched order flow for 15 years, okay, which gives me a skill set that literally maybe a handful of people, when I say a handful, we're talking maybe 4 or 5 people in the entire world have. It's primarily why I'm here. Listen, I grew up around traders. I had an uncle that started a trading firm in the 1970s. Our family owned over 500 seats, literally over 500 seats on exchanges around the world. Eventually, he went on to sell the firm to the Swiss bank, but I got started trading in the late 90s, a little bit after that. A couple of years after I started, I went to work with Thinkorswim, which was a startup brokerage firm. We took the company public. Eventually, we were acquired by TD Ameritrade, literally from 2001 through 2015. Okay, I built the education division of Thinkorswim. I ran education for TD Ameritrade. More importantly, though, I had access to the largest retail order flow, the most complex retail order flow in the industry. And people have no idea, like when I say, I watched order flow for 15 years. Listen, what's order flow? I had access to everything that you did. And that kind of freaks people out a little bit, but we studied you. We studied trades. We know what works, what does not. Okay? We learned from that. So not only did I come from a professional trading background, but I also got to watch your order flow for 15 years. We learned, okay, what comes from billions, okay, in others' mistakes and the knowledge of what works best for retail traders. That's, okay, what you're going to learn here this evening is it literally watching hundreds of thousands of individuals trade, mistakes the others make, okay, and those that are profitable, where they actually kind of derive those profits from. So that's a little bit about me, a little bit about my background here. Again, quick picture. Again, I'm Don Kaufman. A couple of media appearances. I'm still doing quite a number of media appearances. This one happens to be on the TD Ameritrade network. It was just about 10 days ago, so I figured I'd kind of include that one. I've also done quite a number of CNBC tours over the years. This is probably the most, should we say, infamous one. It's Don versus Mr. Wonderful. By the way, in this particular position, it's a couple of years back, Don was effective. All right, meaning that I was the short in Apple, he was the long. It played out very, very well for me. All right, let's get into it. Risk. Your money is on the line. One of the first things that I want to cover this evening, okay, is that you got to understand how to handle your risk, because handling your risk is directly correlated to success in the markets. Too much risk, you're going to panic, you're going to close positions continuously at the worst possible time. And people are incredibly consistent with their panic, okay? Who here has ever been, or bailed out of a position? By the way, these are not rhetorical questions, so jump in here this evening. Have you ever bailed out of a position, okay, or stopped out of a position, and it felt like that was it? You were the lowest price possible, and then the market literally ripped the opposing way. Anybody, okay? Anybody at all? Just kind of curious on this front. right? So again, it's, the one thing I want to reiterate again, I've looked at hundreds of thousands of accounts. We see what works, what doesn't. Okay, what doesn't though, it just gets repeated over and over and over again. So I thought that this was an appropriate picture associated with it. This is what we call puking up a position, right? Listen, cut to the chase. Okay, here's what works. You have to understand, first of all, and I love this kind of quote over here, success. It's got to be a series of small wins, all right? Success in this business, it's not trying to knock one out of the park, constantly. Yeah, you can do that in trading. But you have got to follow a system that has been sourced, okay, from hundreds of thousands of people like you. You've got to follow a system that's been sourced, okay, through millions and millions of trades of people like you. You've also got to learn to cut losses and use, repeatable strategy to obtain incremental returns. And the incremental returns, that goes back to, it's a series of small wins. Last, successful trading strategies exemplify the following principles of building a trade, which I'm about to get into here momentarily. But I just, some simple ideas like this. All right, small incremental returns, I got it. A system that's been sourced, from hundreds of thousands of people. The one thing that's interesting about trading is that everybody kind of stays in the same flock, and when they make mistakes, they all do the exact same mistakes again and again and again and again. The irony of that is you wouldn't know it unless you actually watched order flow, right? And that's exactly my background. Now, I want to show you, what we term principles of building a trade. When I say principles of building a trade, this is what I mean, Principles of building a trade. Trade logic, capital allocation, directional bias. Listen, tonight we're looking not just for a decent strategy. We're looking to build up, consistency. We're looking to build up small account, Now, everything that I'm discussing tonight, yeah, sure, you can use it if you have $1 million account, that's fine. But we want consistency, especially for those of you, that struggle for just that. A lot of people, what they do, they make money, they take one huge loss, and they're just whacked, set right back to even. Listen, before we get into any of that, principles of building a trade, logic, allocation, directional bias. Let me explain what those mean, By the way, those, everything that you do in this business is going to revolve around this to achieve growth. Trade logic. Place strategy and trade logic first. Listen, I'm just going to throw this out to you, And you guys give me some feedback on this. Do you think a big trading firm, I don't know, somebody like, let's say, Goldman Sachs, or somebody like, Citi, that Citi's a trading firm, or a big trading firm like Citadel, do you think that they just go out into the marketplace and say to themselves, I think Apple is going up. I'm going to buy it, Because that's what the vast majority, of this trading community kind of does. They don't spend any time on the strategy. I mean, the vast majority of people involved in the markets, they're infatuated with market direction. They attempt to predict the next move of a stock. What's going to happen? What's going to happen? You're bombarded all day long with CNBC and direction this and direction that and follow the bouncing ball. Listen, you have to have the right strategy. And it has to be coupled with established entry and exit criteria, You do not necessarily need to be right in picking direction in a stock or the markets in order to be profitable. I want you to remember that because it's actually going to be a key focus tonight. You do not necessarily have to be right, and I'm going to show you exactly why. Trade logic, trade logic, trade logic. What I'm saying is that is coming first. I don't care, but I'm bullish in Apple. But that's directional bias. That's the third one down the list. You got to worry about the right strategy. Number 2, you got to worry about allocation. You're like, but why? Because how and where you allocate capital, it's going to be huge consideration as a viable part of your trading methodology. Capital allocation, it has to take precedence over being right. And you're like, well, how could that possibly be? I don't know. Have you guys ever been right but not been able to hold the position long enough to see the profitability? I'm serious. Have you ever been right? You're like, I think Apple's going to go up. So you put this position on an Apple, you get stopped out, and then you watch the stock rip the other direction. You're like, holy beep, 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 and you're beeping yourself out, and it's horrible. You know why? Because you're overallocated. Overallocation is one of the key factors of why people really lose money in the markets. And last, but definitely not least, directional bias. Listen, I'm not anti-charts. I just recognize where you think a stock can go. Listen, the market doesn't always agree with your sentiments. But my Fibonacci told me it was going there. I had the 618. Okay? Listen, being right directionally, it cannot define you. It cannot define me. It can't define us as investors or traders because you might not be right often enough. I can't stress that. Listen, your war cry has got to be duration over direction. How and where you allocate capital can define not only losses, but can be the defining factor in your overall success or failure in the markets. Duration over direction. What does that mean? You need to be capable of sustaining trades long enough to be profitable. And this is a really hard thing for a lot of people to overcome because they sit there and they go, do you want to be right or do you want to be happy? Okay? And literally, my wife says that all the time. I almost got myself in trouble over there. My wife reminds me of that famous phrase. You want to be right? You want to be happy. Okay. And you know what? I'm honest, man. I'm not really great applying it to my marriage, but the logic works really, really well in trade. Okay. I always take the stance. You don't have to be right to make money. And you're going to hear that a couple of times this evening. Remember that. I want to drill it into you. Do not think, okay, that there's firms with billions and billions at risk sitting there going like, oh, I'm going to get sick. I really hope I'm right in this trade. I mean, that's not their game. It's just not. It's not about being right, okay? It's about making money. I don't care if you're right. And you have to push that aside because everything you're bombarded with is about being right. Why? Experience and watching order flow for decades. It's just taught us invaluable lessons. You ever been stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter? I've already asked that question, but I want to reinforce it. This is what people do. Okay? This is what people do. Now, let's get down to it. Core strategy and trade logic. I want to introduce you today, right now, a real world strategy. As I kind of elaborated on early in this presentation, okay? I try to make this very hands-on approach. Like I want you to be able to leave this evening with something tangible, okay? First thing is, okay, we got to clip some of the risk, right? So we're going to get to a real world strategy here momentarily. But first, risk versus reward. We have to debunk a little bit, okay, of, I guess, the logic that people use in this business. Is that fair enough? Everybody okay? When I say is that fair enough, I'm like, again, these are not rhetorical questions. I want to make sure everybody's on the same page here. Because debunking some of the myths, I think is critical in your longer term success. Listen, when we first learn about markets and we're trading or investing, we're often exposed to ideas or ideals or, this logic, if you will, of risk versus reward. So I got involved in trading in the late 90s, just a brief story. And the very first thing that they did, okay, and by the way, I traded in Chicago. This is before I was involved in a startup called Thinkorswim. This is before, we took a company public. Forget that. That was 15 years later, okay? I was 3 weeks out of college. It was the late 90s. They sat me down in a room and they teach gaming logic. And I'm going to teach you something very, very similar. It's one of the first examples, okay, that was ever brought to my attention ever in this business. I grew up around trading. Doesn't matter though. Nobody ever sits you down and talks about strategy, right? Have you ever looked at the probability of success of the above idea? What's the idea? You go out and you risk $1 to be able to make 2. Risk 1 to make 2. Risk 1 to make 2. It's common. It's your strategic entrance to the marketplace. This is what a lot of people like. Listen, every time you're wrong, you're going to lose $1. But every time you're right, I want you to make 2. Have you guys ever looked at the probability of success? Anybody? Okay? Anybody? Want to make sure? Okay? Let's debunk it. Okay, let's take the first example, and we're going to go out and we're going to buy a stock. So listen, I don't care what you want to call the stock. It doesn't, call it Apple, call it whatever you want. It's a $30 stock. There's not that many $30 stocks left, but it's a $30 stock, right? And you set a stop order at 29. And you set a target price of 32. So look, there's your stock, and you bought the stock. And then up here, okay, you're trying to make $2, but you only want to risk one, right? It's a prototypical risk one to be able to make two scenario. Everybody comfortable? Okay. It'll be good, it'll be good, it'll be good, it'll be good. Want to make sure, because if we're not good, we can't go on. All right, so your stop order is pretty much set at 29. Boom! If you hit the stop, you're out. You're out of the contest. But if you hit 32, you hit your target and you made $2. Yes? Good? Okay. Excellent. All right. Next, probabilities in your trading. Let me ask you a question. What's more likely? Getting stopped out at 29 or making $2 profit? I'm just asking the questions here, people. Okay, what do you think is the probability of hitting the stop order prior to hitting the target price? Okay, here, down and dirty in this business. Down and dirty in the business, okay? Markets oscillate, okay? Some people oscillate. This is like oscillate. It goes up, it goes down, right? There's some volatility. It looks like a little bit of a Richter scale lately. It is good. What I'm getting at with these oscillations are often known as volatility. In a normal volatility fluctuation, you just bought the stock at $30. What is more probable? Going to 29, which is a $1 move, or going to 32, which is a $2 move? What's more probable? Okay? It's going to be 29. I mean, almost everybody recognizes that. But the interesting thing over here is that did you take that into account when you looked at your MACD, your Fibonacci, your Bollinger Band, your stochastics? Oh, hell, you even threw in an Elliott wave tonight, right? That didn't even come into your equation. You just put the stop order in there. Why? But Don, I need to define my risk. I'm like, I get it. But you know what? There's a probability embedded in here. There is, and you need to be aware of it. Okay, options are probabilities. You may have never looked at or even traded options, okay? And I guess I said the O word, right? People get all flustered. He's talking about options. Okay, all right, let's get it out in the open. How many people here have ever done anything in options? Anybody? Anything in options? Anybody? I want to know who here's done some options, okay? Or even better yet, because there's a million people saying yes, yes, yes. Has anybody here never traded an option before? You're a complete novice. I'm about to throw you into the deep end of the pool, okay? Anybody like say novice, okay? I don't know what's going on. Listen, I'm not telling you that you have to trade options right now, but I am telling you the options market can help you determine viability and practicality of any given strategy. Why, you ask? Well, let us look at what the probabilities are in the aforementioned risk one to be able to make two scenario. Okay, careful. This is going to get crazy on the next slide. You ready? Deep breaths. Don't panic. Okay. I want to explain this because people really kind of do freak out a little bit over this. Listen, this is Twitter. It's a stock. It's Twitter. And Twitter is trading. The reason, by the way, I selected Twitter, it was like right at 42, right? So Twitter's at $42. All I did is said, hey, listen, okay, let's do that exact same. Like, what happens if Twitter's at 42 and we did that same trade? All right. And just over the next 10 days, let's call it just 10 days. Why 10 days? I don't know. I just selected 10 days. Okay. Just say I thought it was fair, right? If we risked one to be able to make two, which means, okay, if I'm wrong, I'm going to get out at 41. But if I'm right, I'm going to get out at 44. Does that make sense? It's the exact same thing that we set up a moment ago. What you can learn from options is options have what they call probability of touching. Okay, what's probability of touching? It's the probability, right? Like this probability right here. Come on, zero in on it. It says 76%. Okay? What that means, anytime, it's an anytime probability, anytime in the next 10 days, there's a 76% chance of touching 41. Now that's it. You didn't have to trade an option. I'm not talking about a MACD or a Fibonacci or even a Bollinger Band. Why isn't everybody using this? I think that that's a fair question. Okay? I think it is. I think it's a really fair question. How come everybody's not using this? Because everybody's like, but I know what I'm doing out there. Really? Do you know about probability of touching? Because there's a 76% chance, okay, that if you set a stop at 41, because that's what you implied with this strategy, right? Stop. If you set your stop at 41, there's a 76% chance of getting stopped out. But if your target price then is 44, right? And that's your target. What's the chance of hitting your target? 42%. You tell me how your strategy looks now. Why don't you think about this? Okay? Listen. Risk versus reward revealed. In the aforementioned Twitter example, the probability of hitting the stop was 76%. The probability of hitting the target of 44 was 42%. Therefore, with the power invested in me, I'll tell you, your risk 1 to be able to make 2 scenario is it's a setup for a low probability disaster. Okay, and I can't stress this enough. Okay, people like this is what a lot of places teach. This is like, novice traders get in here and they go, well, I'm going to risk 1 to be able to make 2. By the way, this stuff, it doesn't work on an intraday basis, and it's one of the first things that a trading firm teaches a 22-year-old kid right out of college. They go, hey, you want to see where everybody goes wrong? I go, sure. They go, listen, they said stop orders like $1 away from the stock price. The thing has a 76% chance of getting stopped out. You're like, that's ridiculous. Who would ever use one of those? They go, a bunch of people that have no idea what they're doing. All right? And I'm not trying to say that, okay, to be demeaning. I'm just telling you, as I started the presentation, what doesn't work, people just keep doing it. I've been watching order flow since 2001. What doesn't work, people just keep on doing it. Listen, do you want to learn how to do this properly? Okay, because that's what we're going to get into. Now we're going to get into positioning your portfolio with the right trade logic. Let's get down and dirty. How do you position yourself most effectively without exposing yourself to drastic risks and or a low probability? Would you be interested in a strategy, okay, that, number 1, we have to overcome a high probability of being stopped out? I'm just going to cut to the chase. I'm not using any stop orders. Okay. In fact, I like the phrase, we don't need no stinking stops, right? That's number 1. Number 2, define your risk. Number 3, high probability of success. This high probability of success, I'm going to explain that because a lot of people, this one, it's huge. Okay. Probability is actually huge in this trade. Number 4, limits capital exposure. All right. Why does it limit capital exposure? Because number 5, we are never going to need to buy or sell the stock. We are going to talk about options. Oh, he said the O word again. Listen, you want to get involved in stock, that's fine. But you realize in stock, just think about stock for a second. Okay. How ironic is it that I used Twitter tonight? Listen, you could be trading Apple and there could be a tweet and 2 seconds later you could lose, okay, a huge amount of capital. Do you really want to expose yourself like that? No, I don't think anybody does. Listen, right now you are 1 tweet away, okay, from just getting annihilated in this business. You don't have to be. You got to enter with the in-out spread. Enter the in-out spread. It's like enter the dragon. In-out spreads are designed to limit exposure, maximize potential with minimal movement in the underlying. Now, this is a lot of verbiage. Don't worry, we're going to explain it. Yes, in-out spreads are options trades. Fear not the options, as option spreads allow us to limit our risks without the use of stop orders while providing considerable upside potential. Okay, enter the in-out spread. Listen, all I'm going to do right now, I'm just going to walk you through an example. Okay, we're going to do it a couple of times, make sure everybody's on the same page. Listen, you do not have to understand every nuance of options. All I want you to understand this evening, big, broad strokes of logic. Are we okay? Everybody? Okay? Hey, listen, I like to pause from time to time and make sure that everybody's good on the same page. Because some people, they just get a little overwhelmed the moment I say the O word, the options word, because we're going to take this up a couple of notches. Even those of you that are very experienced, you're going to gain a lot out of what I'm about to show you. So the in-out spread, enter the in-out spread. So listen, What a lot of people do is they just come in here and they just buy a stock. I call every stock stock. They just buy stock. Why do they buy stock? Because they think the stock is going to go up. I don't know. Let's say that this is a $100 stock. If you buy a $100 stock, where do you want it to go? Up, right? If it goes up to 105, great. What do you make? $5. If it goes down to 95, great. What do you lose? $5. I mean, that's pretty simple, right? Everybody, I think, kind of gets the logic of there. What I don't like in this scenario, the market goes up, the market goes down. What happens if the market goes down? You lose your $5, you get stopped out, or you just bail, and then the market literally rips the other way. You'll never know it. Stock exposes you to too much, okay? You can't hold on long enough. You're like, hold the line, but you can't. Like nobody can. It's so painful to hold positions in the face of adversity, right? So here's that same stock. Now, yes, the stock is trading at 100. Do we own stock? Nope. We're not going to own the stock. We're not going to have anything to do with the stock. I don't want to own the stock. I don't feel like owning stock. Okay? Why? Because, again, I think it's the adversity for a lot of people. When I say the adversity, it's really hard to hold positions, especially now, probably more than in years since I've done this. I mean, listen, I've traded through everything. Okay? Again, I ran education for Thinkorswim back in 2008, and that's when, like, talk about adversity. I'm like, just, at that point, you either traded options or you're going to die trying. Listen, instead of trading stock, we're going to go out and trade options. In this case, I'm going to go out, okay, and I'm going to buy, in this case, a 99 call. I'm going to buy a 99 call, and that call is going to cost me something. How much is going to cost me? Well, there's a premium associated with it. Let's say that the 99 call costs me a whopping $2, okay? And that's $2. So what am I doing right now? Taking it down here, buying a 99 call. And the 99 call costs $2. Now, how long is that thing good for? I don't know. Let's say it's 1 month. Okay, so I buy the call. I buy a 99 call. Now, if I buy a 99 call, what's it give me the right to do? It gives me the right to buy the what? It gives me the right to buy the stock at 99. Now, do I want to buy the stock? No, I don't want to buy the stock. So why do I buy a 99 call? Because I want the stock to go up. Because if the stock goes up, the 99 call is going to be worth more. Because if you own a 99 call and the stock goes all the way up here, let's say the stock went to 110, what's a 99 call worth with the stock at 110? What is it worth? Well, you could buy the stock at 99. Everybody else in the world has to pay 110 for it. Okay, it's got to be worth at least $11. At least $11. Now, stop right there. A call makes money as the stock goes up most of the time. But I'm not going to just leave it there. I'm actually using what's called an in-out spread. This was the in. That was the in. Where is the out? Well, the out comes here. Simultaneously, I'm going to go out and I'm going to sell, okay, a 101 call. Okay, and the 101 call, listen, we paid $2 for this one. The 101 call, because I'm selling it, I'm going to collect $1. It too is good for 1 month. So I'm going to go out there and I'm going to sell a 101 call and I'm going to collect $1. Okay, net, what did I pay for it? $1. So I paid $1 for this strategy. What do I have? This is a spread. Now, I have the right to buy the stock at 99, okay? And then I sell the 101 call. Now, time out. I called timeout. I sold a 101 call. If people are new to this business, they just totally lose it when I talk about selling an option. Why? They go, how can you sell an option that you never owned? Well, options are rights and options are obligations. If you buy an option, you have a right to buy the stock at 99. Right? If you sell an option, you're giving someone else the right to take stock from you, for instance, at 101. So if I have the right to buy the stock at 99, and then I turn around and sell a 101 call, okay, I have the right to buy the stock at 99, but then I have to give somebody else the stock at 101. You're like, I don't know if I like it. Well, let me ask you a question. What's the most I can make in this spread? What's the most I can make? If I buy the 99 call and I sell the 101 call, I have the right to take the stock from somebody at 99 and somebody can take stock from me at 101. What's the most I can possibly make? $2. $2. What did I pay for it? $1. I paid $1. to be able to make what? 2. But you really don't make 2. The most you can make is 2. Of that 2, you paid 1. So what am I doing? Get this. You're going to love this. I am risking 1 to make 1. Now, there's a lot going on in this slide. I'm risking 1 to be able to make 1. But here's the whole key. The probability of you making the 1 is way higher than of you risking the $1. Again, I'm going to go through this, okay, again, and then again, and then again. I'm just going to pound this into you, and I'm going to show you every nuance of this particular position. I'm risking 1 to be able to make 1. You go, why would I ever want to do this? All right, blank this. Blank everything for a second. If you could go out and risk 1 to make 1, all right, is it worth it if there's a much higher probability of making the 1? Is it worth it? Forget, because people always learn, I should risk 1 to be able to make 2. Well, okay, I'm actually going to give you a different scenario here. I'm going to let you go at it, okay, with a 1, okay, to 1 scenario. But the probability of making the $1 is higher than losing the $1. That's one of the keys to the strategy of the in-out spread. Now, we okay? We okay. Now, all right, this in-out spread, we're going to take it a step further. By the way, there's a great question that came in. Somebody's like, why do you call it an in-out spread? We're going to get there, okay? In-out spreads, Twitter example. Let's continue. We're going to travel back to Twitter in time. We're going to continue our Twitter example. However, we're going to use an in-out spread rather than stock and stop orders. There was a reason that I mentioned stock and stop orders rather than buying the stock at 42, okay? We're going to use a spread to limit risks and provide high probability without the use of stops. Twitter, okay? Again, the irony of talking about Twitter is just awesome because here's the whole irony. It's people tweeting that are having to cause us to use strategies like in-out spreads. You can't make this crap up. You just can't. All right. So with the Twitter's trading right there at about $42. Do I own Twitter? No. I do not own Twitter. Instead, I'm going to go out and I'm going to buy a 41 call. It's trading for $2. And then I'm going to sell a 43 call against it for $1 credit. Now, look, okay? Look, all I did is aligned, okay? Very clean pricing, right? So what am I doing? I'm buying a 41 call. 41 call gives me the right to buy the stock at 41, correct? So if the stock ran from 41, it goes, all the way up here. If the stock ran to 48, beautiful. But wait a second. I also sold the 43 call. Selling the 43 call, it limits me. Okay? I could buy the stock effectively at 41, but then I'm forced to give somebody else stock at 43. Now, I never have to trade the stock. I just like to explain it that way because the most you could possibly make in this thing is $2, of which I paid $1 up front. Okay? But there's some keys. And again, people miss this very, very critical key. You ready? Why do I want to do this strategy? Okay, here's where the stock is right now. What's my maximum risk? Tell me again. It's $1. So I put $1 at risk. Do I need a stop order? No. Why do I not? Why do I not need a stop order? Because I have $1 at risk. People go, can I put a stop on that just to feel good? No, because if you put a stop on it, you're actually going to get stopped out. Why would you do that? You have $1 at risk. If you want to amplify this, do more contract size, right? Options trading contracts. Forget all that garbage. Forget all the minutia behind this. You have $1. You have $1 at risk. That's it. What's the most you can lose? $1. So that's what this is. Listen, the stock starts at 42 and it sells off. You're like, no, this is going to hurt. So all of a sudden, the stock goes from 42 and goes all the way down to 38. You're like, no, please. Oh, the pain. Did you get stopped out? Nope. Okay. By the way, this trade, let's say, has 1 month. Could I do it for 2 months? Could I do it for 3 months? Of course. Okay. But right now, it just has 1 month of time. So right after you put the strategy on, somebody tweets about Twitter. They tweet about Twitter and the stock goes to 38. And you go, I'm dead, man. I'm dead. No, you're not. Because you still have the strategy on. You didn't get stopped out. There's still a really high probability that sometime in the next, I don't know, the next 3 weeks, the stock could come right back up. It only has to come above 43. And when it comes above 43, you're out. You're out of the contest. You hit profitability, pay dirt, gone. Do you understand why it has a higher probability? Okay? Because there's no probability all right, down here that's going to stop you out. And there's still a good probability the stock can come back up. Fluctuation and normal fluctuation is a good thing. Let me ask you, have you seen markets over the last couple of weeks? Anybody seen markets over the last few weeks? Here, this is the spiders. The S&P 500. What's the market done? I was just talking about normal fluctuations. Well, first it was down, and then it was up. And then it went down again before it went up, and then down, and then up, and then up, and then a little bit down, and then went up, down, up, and then it's kind of down over here. You can't make this up, right? Do you want to look at another one? Here, we could look at Twitter. We could do this all day long, okay? First, Twitter went up, and then it went down, and it kind of went up a little bit, up a little higher, until it went down, then back up. I mean, it traded today from 42 to 44, okay? All I ask is just get a little bit up there. Just get a little bit up there. People, this is why you want to use in-out spreads. It overcomes, okay, the high probability of being stopped out. You're not getting stopped out. It defines your risk, which limits capital exposure. You never need to buy or sell the stock. Provides a high probability of success. Here's the key, man. You can initially be wrong in terms of price movement and still come out ahead. You need this in your life. People don't realize how much you need it in your life. You need this in your life. Okay? Now, let me go a little bit further, because I just showed you, went into a live trading application here, and we could spend all night talking about different trades. Okay? Because this kind of marketplace is perfect for it. But I want to show you something about Twitter, because you looked at this and you're like, it's a very clean example. I risk 2 here, I collect $1 here. Yeah, well, that's a real example. It's a real example. How real do you want it to be? Here, this is an options chain. This is Twitter. Twitter was trading at $42, right? There it is. The exact trade right here, well, I did change it. I changed it from, this was $1.90, right here was $1.90, and this one was 90 cents, okay? So if I buy something for $1.90 because I'm buying this one, and then I turn around and sell the other one for 90 cents, net, what am I into it for? $1 debit. Now, all I did here is I watered it down for you initially. I watered it down to make it clean, to make it concise, for you to understand it. But then I actually take it into context of the real marketplace. Why? Because you need to know how to do this in the marketplace. Like, you need to be able to translate this and execute. You know what that means? It means trade. It means trade. So in this strategy, this is exactly what I explained a little bit earlier. So what am I really doing over here? I'm risking $1. Okay? That's it. There's my $1 debit. What can I make? Well, if the stock gets above 43, home run. Great. I'm going to make $1. And there's a really high probability, okay, of that stock. Look at this. There's like a 50% chance we're even going to get all the way up to the 44 level. It's good stuff. And in this example, I want to make something clear. In this example, I did it for 17 days. Could I go further out in time? Of course I could. Okay? Of course I could. By the way, you could determine probability of touching in here. All right? You could determine every aspect. I can give you the exact probability of making, all right, money or losing money on this strategy. And to answer that question, why do they call it an in-out spread? Okay? Because it's one strike in the money, one strike out of the money. One strike in the money, one strike out of the money. But, okay, you got to understand that in-out spreads, they do a lot more than Twitter. Twitter, okay? Oh, come on. It's a $42 stock. In-out spreads give you the power to trade massive stocks. You want to trade Amazon? Amazon is fierce. Amazon is scary. Amazon should scare you. I got something bigger than Amazon, an index product, the mother of all products. Now, we've talked about bullish strategies. You notice that I'm using call spread. I want to give you 2 things in this next example. Number 1, I want to give you a put spread. I want to show you could be bearish. Be the bear you've always wanted to be. Number 2, I want to show you that you can trade the monster product, the mother of all products. What's the mother of all products? The SPX. Dun, dun, dun. This thing is the widow maker. What is the SPX? Oh, I don't know. Let's just call it a $2,900 behemoth. Yeah, you can do an in-out spread. This is a real trade. I took the screenshot a little bit earlier today, okay? But it's just a $5 wide spread. You know what the max risk is? $1.80. That's it. That's it, people. It's $1.80 of risk. Okay? By the way, I wanted to have some fun with this one. Look at the date. I went out 58 days. Do you think you might be able to be right, okay, in 58 days? Because in the aforementioned example, right, previously I did 17 days. I played around with 10 days. Why not give yourself the gift of time? A little bit further out in time. Go 58 days out. You could do it. Listen, as I said, you could do this in Amazon. You want to go to Amazon? Do Amazon. Okay? What's wrong with Amazon? Amazon. By the way, this is a live trading application. What's Amazon done? It's gone up. It's gone down. It went up. Went down again. Today, it actually went up until it kind of went down a little bit. But Amazon, if you want to do this trade in Amazon, how far out in time do you want to go? You want to go 38 days out? You want to be bullish? You want to be bearish? Don't worry about direction. I'm telling you. Look, Amazon. Here's a spread. It's a $2.50 wide spread. For what? For $1. But that's 38 days from now. Why do 38 days? Let's go for the gold. Okay? You could go out here 100 days. Like, how do you know how far to go? I can go 31 days. Okay? Like, which one do you want to do? Do you see, like, when you start opening up all the options, look how many options are out there. There's a whole lot of options in terms of options. Okay? Again, look, 45 days. 45 days will give you more time to be right, more time to be wrong. You'll laugh, you'll cry. But I'll tell you what, if you're going to trade an $1,800 product, let me ask you something with an $1,800 product. Would you rather be wrong on $1,800? Would you rather be wrong with $2.08 at risk? You tell me. By the way, this is a bearish trade. You want a bullish trade? You can do those too. Why not? You can do the bullish trade as well. You decide. We're going to show you, though, what's right. Let me give you a couple of really specific examples. This entire summer, this has been like the summer of in-out spreads. I'm going to give you live in-out trade examples. First of all, this one, MA. What's MA? You guys tell me. By the way, this is an interactive session. You feel free. You jump in anytime. MasterCard. Okay, in MasterCard, I want to show you exactly, these are the trades. By the way, the trades that I'm showing you here are taken, okay, these are not paper trades. They are taken directly from my thinkorswim account, right? I'm going to show you really briefly this, okay? This is my thinkorswim account. There are multiple portfolios in here. I have a risk twist and a in-out spread portfolio, okay? Today, not a massive day, but today, okay, net, I'm up just shy of about $5,000 today. So everybody's aware, okay, I don't have a massive amount of capital in the account. You can see my entire margin position is I'm only tying up $22,000, and this is an IRA. Now, every trade example that I'm doing here, okay, was taken from this account statement. Okay, everything I've done, this is just 70 days, by the way. Everything that I'm showing you here is taken directly from these trades. All I did is just copied and pasted them into here. This is a MasterCard. And as I said, I'm just going to show you a couple trades from the summer. MasterCard in and out spread. Here's one that I opened, okay, on May 31st, and I closed it on June 3rd. I opened it for $1.08 debit. I closed it for $1.73, okay? So every $108 invested, I got back $173. Okay, it's a what? A 60% return. Okay? Not every trade is going to be a 60% return. This one's a 60% return. Now, all I'm suggesting in here is that you did the absolute minimum, $108 invested, because one of the keys tonight that you need to understand. Okay, there's a lot of you that are like, oh, great, $108. Listen, commissions, push them aside right now, because I'm going to tell you something in a little while here. Commissions, we have got smoking commission deals through several different brokerage firms. We now have 3 brokerage firms on with us here at TheoTrade that give absolutely smoking commission deals. You don't even necessarily have to open an account. If you already have an account, they're going to give you the deals. Okay, you don't have to do $108 invested. You could do, okay, $1,080 invested to make what? $1,730. Does that make sense? So you determine how big you want this to be. I put the minimum in, okay, down below. Listen, what our members are saying. Use this strategy to double a small account, like Dylan T, who wrote in. The in-out spreads have been very helpful, as I've been able to get on a hot streak and double my small account in 4 months via the use of in-out spreads. Now, listen, this could be a $2,000 account. It could be a $10,000 account. It's just about consistency. The next one I love, minimize your risk by limiting your account's exposure, okay, in the market, like Phil S. He wrote in, using the in-out strategy, last week I locked in $1,275, okay, in some that's Halliburton put spreads, and today I locked in profits of $1,240 on several positions I identified. I've been averaging 7% a month for the last 4.5 months, profits of over $11,000, okay, and never had more than 25% of my account at risk, usually much less. The reason I look at this and you're like 7% a month, listen, okay, TheoTrade, this is real. Okay, this is not like people come here and they're like, wait, is this going to be make 300% on your money? Get rid of that crap. This is trading. This is real. I spent my entire life in this business, 7% a month. It's absolutely spectacular. Okay, take it all day long and then some. Back to a couple of examples. Here is a Cisco trade. Now, again, I said this is the summer of spreads. So I'm actually taking you through May. Now here we are. By the way, this is a great one. This is a great one because I put it on literally on the 11th. I took it off on the 12th. Okay, this wasn't a total home run, but every $91 invested, I got back 119. It's a 31% return, but it's a 31% return. Look, I opened it at 7 in the morning. I closed it at 24 hours later. Okay, it's 25 hours later, but those are the opening and closing positions. Now, listen, you could have done more. You could have done $910 investing, got back, $1,190. That's up to you. Next, EEM. Again, we're going forward in time, right? So here we are, late June. Okay, late June, markets were rocking again. Here's one that I actually opened June 28th, closed it on the, July 30th. I had to hold this one a month. Okay, 79 cents though to $1.20. Every $79 that I invested, I got back 120. It's a 52% return. So remember, that could be $790 to get back $1,200 and so forth. All right. Next, Walmart. Okay. We're progressing in the summer again. Here we are, July into early August. So it's the summer of love with in-out spreads. In Walmart, here's one where I put on for 88 cents, took it off for $1.37. Every $88 I invested, I got back 137. It's a 56% return. Okay, 56% return. It took just shy of a month to do that. Now, granted, you've already noticed I've had multiple strategies on at the same time. You don't just open one and be like, is it going to work? Okay, these overlap a little bit. You can put a bunch of them on. All right, so that's Walmart. Next, the XLE. What's XLE? Anybody know? What is the XLE? Okay. By the way, I was showing a couple of people. There are a couple of call spreads in here. These are a few put spreads that I've actually done. We'll get to the call spreads. We're getting there. Here's XLE. It's the energy ETF. And the energy ETF, by the way, this one wasn't that long ago. Okay. So this one, it was a 3-day strategy. Opened it for $1.03, closed it for $1.33. Every $103 we invested, got $133 back. It's 29% return. Next, everybody's favorite stock, GS. What is it? Goldman Sachs. Okay. This is a 1-day trade. This is a big one too. This is a 1-day trade. Okay. Opened it on August 13th, closed it on the 14th. 228 debit, made $350. Every $228 invested, I got back $350. It's a 54% return. It's a 54% return. Literally, that's 25 hours of trade. Next one over here, Microsoft. Okay, is this getting recent enough for you? So Microsoft, this is the last one that, listen, I have tons of them on right now. I'll literally show you. I got tons of these things on, but Microsoft's the last one, okay, that I've closed as of recently. Here's Microsoft, opened earlier in the month, closed a little bit later in the month. 93 to 45. Again, every $93 I invest, I got back 145. This is a 59% return. It just goes on and on and on. Again, it's the summer of in-out spreads. And I wanted to show you example after example after example because, okay, you can find these trades very consistently. All right. And some people are like, well, I'm bullish, I'm bearish. It's okay. Like here, this, the XLE was a bullish trade. There was a couple of bullish, couple of bearish mixed in over here. That's the Microsoft trade. Again, we kind of spread the love around a little bit. You got no time? It's no problem. Each and every trade that I have shown, okay, up until this point today, was displayed live at TheoTrade. It means I did this in front of people. Okay? Do you notice the times of the trade? What's important about the times of the trade? Look, this one was 7:25 or 8:15. This one's 6:45. This one's 7:05. Notice every single trade that I did, okay, was pretty much, by the way, I'm on Pacific time. It's the first hour of trade pretty much of every day. Why? Okay, because that's the time that I get on live. That's the time I get on live. I do everything. The trade results we're showing, okay, are perfect for part-timers. It doesn't mean that you have to trade live with us to get this stuff. I just do it in front of people. The in-out spread, it's totally hands-off. It uses set it and forget it. Okay, just set and forget. It's a good till canceled order. So when you put the trade on, okay, you don't have to sit there and be like, is it going to work? Is it going to work? I got to get it off. Is it going to work? I got to get it off. Okay, even a fraction of your time is enough to see results, right? Again, what I wanted to key into here, you don't have to be glued to the screen. This is a part-time kind of gig with in-out spreads, right? Now, a few of the characteristics of in-out spreads. First of all, the attributes of this strategy to grow a small account, the high probability in-out spread's undeniable. You never have to buy the stock. You can define your risk. Risk is limited to precisely your comfort level. You don't need a stop order. You can vary time frames and not pay more. I showed you that, right? You could go 58 days out or 30 days out or 17 days out or 10 days out. The probability of profit is high. It's the perfect spread to reduce risk of a stock portfolio. Okay, it's an excellent tool for those seeking returns to build a smaller account. That's what this is about. It's about building a smaller account. Now, you got to learn to build the in-out spread. Don't let options intimidate you. The spread below, this Twitter spread, it's done for $1. These spreads are massive power saws. Used correctly, they can be the fastest, quickest, cleanest way to produce returns and to grow a small account. Used incorrectly, you're going to lop off a couple of fingers. That's the key to the spread. You have to know how to use it and use it properly. You can do in-out spreads. Maybe you don't know options or you have limited experience in placing option trades. Do not let options intimidate you. You need these strategies for the foreseeable market future. I mean, people are going to put their entire retirement savings, okay, into what? Into the marketplace, and you're one tweet away from just getting annihilated. And you've seen that time and time again. We can show you how and when to place in-out spreads. It is a matter of a few hours. And what we do here at TheoTrade, we create detailed recipes for every strategy, including in-out spreads, to grow a small account. You wouldn't bake a cake without a recipe. I mean, people learn to bake a cake with a recipe, okay? Why would you trade without one? Do you have a recipe right now that you're using? Because this is what you need to know to successfully enter and then exit in-out spreads. You need to know what makes a viable in-out spread candidate. Should I trade Apple? Should I trade Microsoft or Twitter or Amazon or Microsoft or XLE or SPX or the spiders? Okay, maybe I should trade something called Joe's tree cutting service that nobody's ever heard of. You need a candidate. Number 2, what volatility should I seek out? You know what? You can go out there and you can trade some Roku. Ooh, Roku, that's dangerous. Okay, you're like, I'm going to trade me one of the marijuana stocks. Okay, yeah, you could use in-out spreads on those. But the volatility, it has to be right. You need to know the right stock, the right index, the right ETF, and the right volatility. Next, what options expiration do I select? Should I do this for 10 days or 17 days or 38 days or 58 days? Okay, I'm going to tell you right now, there is a definitive answer to that. Okay, what should be the delta of the option I buy? Ruggy, because some people don't even know what delta even is. You got to have the delta of the option to buy. The delta, what options do I sell against my position, right? There's one option bought and one option sold. You got to do both. How do I build the trade? Like literally, what do I click on to build the trade? What's the right amount of risk for me? If you have a $2,000 account or a $10,000 account or a $20,000 account, or God forbid, a $2 million account, it doesn't matter. By the way, in-out spreads, I'm going to tell you right now, you can allocate some serious capital to it, as I showed you. I have $22,000 with almost $5,000 of P&L today. This is a ton of in-out spreads in here. There are a ton of in-out spreads, okay, accumulated in here. Apparently some stuff that's up 184%, 242%. There's some big returns, okay, against these. Okay, you got to know the right amount of risk for you and your account size. Let me show you, okay, what we do here at TheoTrade. this is it. TheoTrade, we create recipes in trading. That's what we're about. Because trading, it's all about answering, what if? What might be a good stock or ETF candidate for in-and-out spread, the correct options expiration cycle, the capital that you're going to commit, the right strike price options, do I buy, do I sell? In growing a small account, what should my allocation be? We have the answers to all of those. We build recipes. You know what a recipe is? It's just checklists. Literally checklists. It's a pre-flight checklist. If you got into an airplane and you were going to take off, okay, every pilot knows. You go step 1, check. Step 2, check. Step 3, check. We build checklists for each strategy. And then we have unique variables, meaning what if the stock goes up? What if the stock goes down? Okay, everything that you're going to encounter is covered. We answer all the questions. The right probability, how many option contracts, when do I close the spread? What if the stock sells off big? What's the correct return for the strategy? If we rally massively, can you fix a losing trade? It's the how, it's the when, it's the why, it's at the what price. It's just the beginning of the variables that you're going to face while buying in-out spreads. It literally is, okay? You can read anywhere what a spread is. I know some people right now, as I said, like earlier, I'm like, put down everything you're doing. But a lot of people, like, you can go out and you can Google what a spread is. You might, right now, many of you right now, you may even know how to build a spread, okay? That's not what TheoTrade's about, okay? I could teach you to build a spread, obviously, in 5 minutes, because I did. What you need is the recipe for success, which comes from 20 plus years of trading experience, access to client order flow for over 15 years, okay? I have viewed and studied millions of trading accounts. We used to study trading accounts at TD Ameritrade. I ran education for over 15 years, okay, at the firm, both Thinkorswim and TD Ameritrade, which had the largest option order flow in the entire industry, okay? Criteria, it's the only recipe for your success. The following strategy and corresponding criteria requires the utmost attention to detail. We spent years fine-tuning this trade, okay? Fine-tuning the in-out spread, fine-tuning the setup. You must follow the steps to build the trade. We have a class coming up. It is the Guide to Small Account Growth with In-Out Spreads. It's a course, okay? The course is coming. It's coming! September 14th. I'm the trade instructor. Okay, this course now, it's going to be 4 hours, and it's going to be done live. Okay, this course is going to be done live. It's a 4-hour course. The course is recorded, and it's archived, okay, for TheoTrade mobile and web. We have a mobile application. And the class, okay, I also want to show you, it qualifies you for a reduced commission rate. It'll qualify you, okay, at 3 of the largest brokerage firms, TD Ameritrade, E-Trade, okay, Tastyworks. We have reduced commission rates. Again, if you attend the course is $497. Now, okay, you hang with me because we're going to give you some bonuses tonight now that we have never done at TheoTrade before. Not even close, okay? We're changing up in a big way, okay, what you can come to expect from education in this entire industry. Right? I'm telling you, every one of you, you need to go to the Guide to Small Account Growth in-Out Spreads course. Again, it's 4 hours. It is worth your time. I know people immediately like, that's Saturday. I don't know if it's going to work for me. Listen, it's recorded. The slide deck that has all of the checklists, all the entry and exit criteria, it's available to you. I make it available on September 14th. The class is recorded. You can play it back 24/7, okay? Again, it's $497. You stick with me right now because a couple things. Number one, I'm going to show you where to get that indicator that I talked about early on. Number two, we've got some pretty amazing bonuses for you tonight. Here we go. First of all, the small account in-out spreads. These are some key points that I want to hammer home. In this course, you're going to learn to construct in-out spreads. Easy to learn, okay? Easy to do, easy to use, easy to place. Number two, okay, how to buy long duration options without paying more. Give yourself the gift of time. Number three, how to use defined risk versus reward strategies so you never have to lose sleep over your position again, right? This one's huge. Don't get tweeted against. Don't have China come out and be like, oh, tariffs are on, tariffs are off, okay? In-out spreads are used in any market condition. We're also going to teach you to build your own in-out spread with detailed step-by-step entry and exit criteria. In-out spreads are easily managed with set and forget order types. Don't think you're going to sit here. Listen, is there a little bit of a ramp up period? Yeah, okay, but that's it. Then you're setting and forgetting. Number 7, in-out spreads can be done with a trading account, okay? Minimum $2,000. And all the trades, number 8 here, all the trades can be done in retirement accounts. The account that I showed you, and every trade that I showed you today was done in my IRA. Why do I do that? Because most of our clients are trading in their IRA. Okay, it's fine. Minimal options experience, smaller accounts, looking for larger upside potential, we cover it all. Number 9, capital allocation. You're going to learn position sizing techniques to grow your account. Number 10, and critical, follow the recipe to build a trade. Now, as I said, we're going to do a couple of bonuses tonight we've never before done. You want a bonus? Well, TheoTrade goes beyond one class or one indicator. People, they just want everything. They want everything to trade. They want everything to invest. They want to do it at one place and at one price. Here's the first bonus we're going to offer this evening. Number 1, access to over 84 trading classes. How about we give you available immediately and on demand? Okay? We'll give you every course that we have done, okay, over what has now been a 4-year history of TheoTrade. It's over $9,000 in classes alone. Classes like Collect Income Being Short, The Next Big Short, Guide to Selling High Probability Spreads, Iron Condors, Sell Premium, Minimize Your Risk, Survive and Thrive in Extreme Volatility. There's day trading classes, covered calls classes. This is just a glance of a couple of the courses. By the way, this includes what? The September 14th. That's the class that's coming up. So the first bonus tonight, you get access to 84 classes. By the way, I didn't do all of the 84 classes. Here are the instructors. TheoTrade's not a one-trick pony. We got Jeff Bierman, who worked with me at TD Ameritrade, and Matt Williamson. By the way, Jeff Bierman, he was the chief market technician for TD Ameritrade. He built most of Thinkorswim charts. And Corey Rosenblum and Brandon Chapman and Steve Miller, Tony Rago, goes on and on. Okay, that's your first bonus tonight. Access to every single class that we've ever done. Okay, bonus number 2. You're going to love this. We're going to give you all access TheoTrade VIP membership pass. That's it, free. We're giving you access to TheoTrade, okay? And all the classes I talked about for the next 3 months. It's unlimited access to our stream. That includes live trading chat room. We broadcast 6 hours a day. Not everybody can make it. I get it, okay? But the traders provide real trade ideas, real-time market insight and analysis. I'm in there every single day. We email out trade ideas, including in-out spreads. We have 5 distinct trading portfolios. We have daily coaching sessions with timely topics. And we'll even give you, okay, instructors and access to them. We'll answer your trading questions via email. It's about $1,000 in support, trades, and insight. I'm not done yet. Included in bonus number 2 is access to 59 proprietary indicators, okay, and scans. Auto expected move, gravity points. By the way, I gave you the SPX tonight. I'm going to give you the SPX indicator. Okay, all of our indicators. Do you realize there are firms out there that will charge you $1,000 or more? They don't even have indicators, anything like the auto expected moves. They don't have a TheoTrade RSI Laguerre. They don't have Quantix. Okay, I know that might sound like foreign to you, but I'm telling you, instead of charging you $1,000 per indicator, why don't we just give you everything? It's everything, okay? TheoTrade includes everything you need to invest, everything you need to trade. We'll give you all the classes, all the coaching, the email access to instructors. You can email us literally and say, this is my idea. Does this work? And we go, no, that's the worst thing we've ever seen. Don't do the trade. And sometimes we say, no, that's wonderful. Do it. Okay, good trade. We give you a live trading chat room, live trade ideas, indicators and scans. Mobile access, okay, mobile access. We have mobile devices, okay, which we have what? Okay, our mobile application. You got a mobile device, we've got the application, whether it's Android, whether it's Apple, okay, there is TheoTrade Mobile, and you can access it 24/7. It's everything you need to succeed. And you got to realize what we've really built here. What have we really done here at TheoTrade? We're the Netflix for traders. You stream anything, anytime. TheoTrade is the Netflix for traders. I say that because any genre of trading, okay, somebody says like, Don, I trade Well, just intraday. You do intraday trading? Let me show you something. This is TheoTrade. Okay? You trade intraday. By the way, this is the chat room. But somebody says, I trade intraday. Well, here's our class archive. Day trading classes, technical analysis, option strategies, stock classes, futures classes, hedging, trend trading, option newbies. Okay? Somebody says, I'm overwhelmed. Good, start here. There's this whole start here menu. You know what start here is? It's where you're supposed to start. Options 101, options 201, what products to watch and why, order execution. Okay? Fully searchable. You can search any topic you can dream of. And I'm dead serious. Any topic that you can dream of. Okay? And we have it in there. We have it. I'm serious. Like, you guys are going to be shocked how much stuff that we have. That's why I call it, as I just kind of shadowed back down, it's the Netflix of trading. It's amazing what we've actually built in here. We're going to give it to you all today. It's $297 for 3 months. Okay? That's why I said, you stay with me. It's $297 for 3 months. And I want to be very, very clear right now. Okay? I'm about to make this, and this is the big differentiating factor. This is going to be a completely riskless trade for each and every one of you. We're going to give it to you for $297 tonight. It's TheoTrade.com/I as an interesting N. Okay, it means like in out spreads. TheoTrade.com/IN. Everything that's listed here, it includes the high probability, spreads course, right? So that's the small account growth course is part of it. Access to 84 trading classes. There's new monthly classes, okay? The live trading chat room, indicators, emailed trade ideas, 5 distinct portfolios, okay? Daily coaching sessions with timely topics and options, futures, stock. Instructors will directly answer your trading questions. Here's where I'm going to make it a riskless trade. And again, I'm going to go over everything that's included. It is $297 tonight, okay? TheoTrade, well, it's going to be a riskless trade. Now, I'm going to be very clear about this. Everything you need to start trading from novice to absolute expert will be covered in TheoTrade. Everything. When I say everything, like, I don't use that like lightly, okay? I don't use it. Listen, when I say everything, we have option strategies, we have stock strategies, we have day trading classes. You won't even want to learn about pairs, okay? You name a genre of trading. Again, it's in here, okay? We're going to stream to you live for 6 hours a day, but it's all archived because you can't make it necessarily all the time. It's in there. In addition to it, though, we're going to give you a money-back guarantee. You got to trade with us, okay, over the next 3 months. I'm not telling you that you need to make 200% or 300%. I'm just going to tell you this. You trade with us over the next 3 months. If you're not satisfied, email us. Email us, okay? Provide us the details of your trades and receive a full refund. If you don't like it after 3 months, but here's the only stipulations in the money-back guarantee, okay, because we have never done anything like this. You got to do 10 trades using in-out spreads, and you got to use our criteria in the next 3 months. You have to have an initial account value of at least $2,000. That's US dollars. Don't mess with me, okay? You must follow the TheoTrade criteria for in-out spreads. This is the second time I've said that because, people are like, I don't know what I did. By the way, you have to provide real account statements of trades. This ain't paper trading, people. We're not going to make it difficult, okay? All I want to do, okay, is source what trades people are doing, okay? You know why we're really doing this money-back guarantee? Okay, it's a riskless trade for you, right? We're really doing it because then, okay, I want to see what people are doing right and I want to see what people are doing wrong, okay? And if you're doing something wrong, I'm telling you, in 10 trades, I can tell. And this is only going to help us build, okay, better trading criteria moving forward, okay? Period. It's $297, okay, for 3 months. All right, you're not satisfied? We just give you your money back. Now, get into TheoTrade now. We're going to work with you directly, which, listen, we have 7 full-time instructors, got a lot of support people. For the riskless trade deal, okay, that guarantee I just mentioned, it's 50 spots. That's it. I'm cutting it off after 50 spots. I'm cutting it off after 50 spots because, quite frankly, okay, how many trades can I possibly look through, right, in the next, 3 months? It's 50 spots, okay? We also have a problem in matters of trade size. We trade live. When you start trading live, again, it's huge size. The $297 offer has never been available, okay, before tonight. And we've never had a riskless trade deal, okay? And 9 a.m. Central Time on September 14th, okay? It's done. It's gone. I want to be able to source some trades out there. It's 50 spots max. All right. Again, it is a riskless trade for you. And I want to reiterate just that. Okay. It's a money back guarantee. There's a couple of stipulations. You got to do at least 10 trades in the next 3 months, which most people do anyway. And it has to be real trading in there. That's it. Okay. We're only going to open up 50 spots. Now, what our members are saying. Thanks, Don. Just finished my very first, ever quarterly trading report, and I grossed 21% return on investment. Thanks for all the help. Looking forward to your intraday course tomorrow morning. Fantastic service, okay? Became self-directed with my trading through the education I got here, okay? Thanks, TheoTrade. I'm up 4,000 this week. Just wanted to let you know, Don, okay, how much I appreciate him and what he does. For the first time ever, my account is gone green. TheoTrade Access. This is exactly what you get today. So I'm going to take you, okay, in a moment to this TheoTrade.com/IM. But again, to detail everything, the guide to small account growth with in-out spreads class, it's September 14th, okay? You get that. It's in $297, okay? You will get a discount if you have an E-Trade account or a TD Ameritrade account, okay? Or a Tasty account, right? We have free bonus number 1. It's 3 months, all access, okay? All access. That's live trading chat room. Everything's archived. We give you access to the archives, email trade ideas and portfolios you can follow, trading indicators. By the way, people are like, I'm going to just download the trading indicators. That's worth $297 all day long. Daily coaching sessions with 10 hours of live support. Okay, that's every week. All right, we're just constant when coaching sessions. Bonus number 2, we give you every class we've ever done. There's 84 classes. There's day trading and swing trading and technical trading and beginners options trading, advanced options trading, much more. And there's new monthly classes. It's TheoTrade.com/IM. Now let me take you guys there for a moment. Okay. Follow me to this link for the SPX expected move indicator. Now, okay, go to this link right now, TheoTrade.com/IN. I'm going to give you guys a second to do it. Okay, I'm actually bringing it up right now. Pull it up on the page. So once again, if you missed the address in there, okay, it's TheoTrade.com/I, okay, N, in. It's the guide to small account growth with in-out spreads class, okay. I am going to be the instructor for that. Now, this class is going to be, it's going to be longer than 3 hours. I'm going to let you know that right now. I'm not going to be able to pack it into 3 hours. Okay. It's $297 today. You must click add to cart. Okay. Here's why you need to learn these things as we went through some of the checklists. Okay. That's what this course is about. It's about going in there, having to find risk. Learning that in any market condition, you're going to have a checklist to go through, learning all the variables, whether you have a $2,000 account or a six-figure account or a retirement account, how to minimize risk, maximize returns, okay, when to open, when to close, okay, why trading in-out spreads doesn't mean you have to be glued to your screen all day, okay, includes a discounted rate to multiple brokerage firms, the bonuses, there's 84 master classes, there's day trading, swing trading, technical trading, okay, all the master classes, okay, they're available right now. You enroll for it, literally click, all right, on add to cart. Within 20 minutes, you'll actually get the password, okay? You'll get the password, you'll be off and trading because there's 84 classes already archived in there. You start watching them, okay? Binge watch. It's why we call it the Netflix for traders, okay? Bonus number 2, it gives you 3 months access to everything we do. It's 10 hours of, okay, live support each week. Interact with us, okay? There's nothing else like that, where you're literally interacting with us in the chat room. By the way, when I say the chat room, okay, it looks like this. You're actually typing questions in here, just like you guys are doing tonight, right? So it's important to me that you know, okay, that you can get us. You can also email us, support@TheoTrade, okay? Now, we have a private trading room access for the next 3 months. You're going to get high probability trade ideas. We send out high probability trade ideas, 5 turnkey trading portfolios, 59 proprietary indicators. Again, click the add to cart button now. By the way, there's the SPX expected move indicator. Okay, that's it right on the bottom of that page over here. We're also here to be able to answer your questions. Now, okay, I'm going to start answering a couple of your questions. And again, for those of you, you're ready, enroll now, TheoTrade.com/in. By the way, after you enroll, the 800 number, it's 800-256-8876, right up here. By the way, also, you ever need to get a hold of me after tonight? Support@TheoTrade.com. Okay, we use a common inbox, all right? So this doesn't, people are like, he's avoiding me. No, he's not. Okay, we use support@TheoTrade.com for all the instructors. Shoot us an email there. I will get it. Okay, now let me get to some of your questions because, I've been doing this long enough that I know some of the questions that obviously come up from time to time. Here, check this out. Your questions answered. First of all, what are you going to need to start here? I want to hammer some questions home. You need a laptop. You need an internet connection. If you're an absolute novice, good. We have everything you need to get started. From absolute novice, if you're the most extreme trader in here, please, okay, we can handle you. Okay, we can handle you. I mean, I've got firms that we're actually contracting with right now and doing consulting work with. So we handle some of the most extreme traders. Okay, this, number 2, is not a membership. We're not going to auto-renew you or bill you again. People always ask that. Go, well, do I have to pay $297 for the rest of my life? No, it's $297. That's it. You're out of the contest. It's a 3-month deal. Okay. After 3 months, if you decide you want to do it, good. Okay. Then, okay, we're not gonna shoot the price, through the roof necessarily. Listen, it's not a membership. We're not going to auto-renew you. TheoTrade, number 3, archives everything. We understand not everyone can watch, okay, live trading throughout each trading session. That's not for everybody, but it's nice to know it's there. We're going to provide you access to TheoTrade Mobile, okay, where you can download archives and view at your leisure. Even if you're in an airplane, okay, even if you're in an airplane, we will allow you, again, to stream offline. You can download our archives just like Netflix, right? That's what our mobile app is for. Number 5, you can email us anytime. You're going to receive a response within 24 hours. It'll include trade-related questions. Okay. How many times have you ever emailed somebody like, I never even get an answer? We answer the emails within 24 hours. Okay. I can't tell you I'm going to get back to you in 2 seconds. I might be live, right? So number 6, you'll gain access to every course TheoTrade has done in the previous 4 years, including classes, coaching, live trading sessions. All the archives are searchable. Name a trading topic, and TheoTrade has an archive on it. Okay. Number 7, all these trades can be done inside an IRA. All of them can be done inside a retirement account. You have to have as little as $2,000 within the account. Number 8, we at TheoTrade can help you get approved for options trading at several major brokers. So if you're like, I can't get approved for options, how am I going to trade options if I can't get approved for options? We got your back. Number 9, at 9 a.m. Central Time, September 14th, okay, the 297 deal, it's gone. I'm not doing the riskless trade thing forever. That's insane for us, okay? And, okay, tonight we're limiting literally to 50 people. Get results, take action, enroll TheoTrade now. There's no risk to you. There's absolutely no risk to you. It's TheoTrade.com/IN. I'm going to answer a couple of more questions that are coming up here, okay? Listen, you guys are rocking it. They're rocking it, okay? It's really refreshing to have you guys putting this together, okay? Sharing your knowledge and not upselling everything and turning and burning your customer base. I mean, that's what this idea is about, people, okay? Listen, you've got a customer in life for me because of this approach, and I'm sure not the only one. I love this one because we're not here to like nickel and dime people. We're not going to charge you $297 for this and $100 for this and $500 for this. It's $297. And I try to make it as riskless as a trade as possible, okay? Don is the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of the markets and how they work is like sitting next to a finance PhD. Highly recommend learning what this man has to say. Love it. A couple of other questions over there, okay? Kathleen came in and said, when you sell options, okay, when can you get the stock assigned to you? So Kathleen, actually, that's one of the variables that we teach inside of the course. I want to reiterate that. That's one of the variables that we teach inside of the in-out spreads course is we are going to avoid, okay, all assignment of the stock. It's simply not going to happen. And if it does, the spread protects you. So if you're worried about exercise or assignment and options, like the evils of those, we will teach you how to circumnavigate that all day long. But in the event that it does happen, because crazy things can happen in a marketplace, in the event it does happen, you're going to have defined risk. You will not take major risk because of assignment. Okay. Now, Roy said, what size account do I need to generate $1,500 a month? Okay. Now, that's always a tough question. Okay. Because I'm going to tell you this, Roy, it depends on the amount of time you're willing to put in. Okay. Generally speaking, when somebody says, I need to generate X per month, okay, I do suggest having over $25,000 in the account because of a day trading margin rule. But today, okay, we can even teach you now to circumnavigate those rules. I would suggest if you really want to try, when people start talking about, I need to make $1,500 a month, if you really want to trade for a living, okay, legitimately, you need to probably have over $20,000 to start in the account. And I'm not telling you on month number 1 that you're going to be like, oh, that's it. I'm making a living over here. I'm not telling you that. There's going to be a ramp up period. Okay. TheoTrade, this is real. This is, like, how else do I tell that to people? I spent 15 years in the brokerage world. Listen, you don't make 200% on your money a month because that's all fictitious crap. Okay. The results we're showing you here today are real. And I want you to recognize that, Roy, is that, 20 grand is probably reasonable at 1,500 a month. Okay. But there's going to be ramp up to that. Next one, Cheryl. Okay. How are you picking the exits? I don't want to be in a chat room all day. Oh, Cheryl, in the class, we're going to tell you the exact exit. It's based on a percentage. I can't give it away. That's the exciting part. No, it's, and you set and forget the strategy. You actually can set the order, Cheryl, good till canceled. Okay, so it's good till canceled. You don't have to sit there all day. I promise you don't have to sit there all day. But I will say this, the chat room is quite amusing. I spend a lot of time in there on a day-to-day basis. You guys are going to learn to love it. I'm serious. You go into the chat room. If you have the time, spend it in the chat room on a day-to-day basis. We have now, over 3,500 people active in TheoTrade. But on a day-to-day basis, at any given point in time, it's like over 1,000 people in the chat room. It's kind of cool. It's like we're the biggest chat room, pretty much out there teaching anything like this with spreads. And we have futures trader and a stock trader. We're doing 6 hours a day. Okay. Next one. Arnold said, but how do I pick direction? Direction is a portion of the course, but you're going to learn not to put all your pressure, not to put that much pressure on the idea of direction. So there is a directional bias, segment of this course on small account growth, with in-out spreads. But, I don't want to put all the pressure and the stress of you having to just find direction. And for those of you that I really want to spend some time on direction, I have no problem with that. And that's actually why in the archives, people say no, I want to spend some more time in direction. That's why we have technical analysis classes. Did I mention that Jeff Bierman, is employed here? And Jeff Bierman, he also is a professor of finance, at Loyola. And part-time, he's the professor of finance at Loyola, works pretty much full-time during the day with us, and actually teaches a couple of graduate courses in the evening. His technical analysis is unrivaled. You guys are going to love him. Steve Miller has been around since the 1970s in this business. Again, it's TheoTrade.com/in. I think it's Ryan. Can you put predetermined sell orders on these spreads? Yes. Just as I was saying to Cheryl a minute ago, Ryan, was that you can absolutely use predetermined. In the course, it will detail, what predetermined happens to effectively be. We'll detail in the course this is exactly how to set the sell order. It'll tell you the exact price to sell it at. We base it on a percentage. It is very, very straightforward to be able to do that. All right. I love it. All right. By the way, I want to let you guys know another time because another question just came in. There is no auto renewal in this offer. What that means, it's $297. After 3 months, that's it, you're done. It does not auto renew. It's not set to do that. I don't want you guys to think this is a membership. We are doing something very, very different here this evening. And again, I want to reiterate, there is the money back guarantee. Again, we wanted to make this as riskless, if you will, a trade as we possibly could. Okay. So, by the way, we have a reduced commission rate. Somebody was asking for, it's predominantly options at TD Ameritrade. So again, click the add to cart button now. All right. We're going to limit it to 50 people on the riskless trade. And that's what I want to do. I want to, hey, listen, I want to make this as riskless as possible for you. Okay. If you can be there tomorrow morning, come into the chat room tomorrow morning. Cruise around TheoTrade tonight. Literally enroll right now. Cruise around TheoTrade tonight. Check it out a little bit. Come into the chat room in the morning. Say hello. Right? It's TheoTrade.com/IN. I want to thank everybody for joining us here this evening. Okay? Got a wonderful offer today. It's $297. Okay? For 3 months of everything we do here at TheoTrade. Okay? No contract, no auto renewal, riskless trade. If you don't love us after the next 3 months and you traded with us 10 times or more following our criteria, we'll give you your money back. Thanks everybody for joining us here this evening. Have a wonderful night. Bye-bye.